traders, welcome to another video here on the Learn to Trade channel. Today we're going to talk about um, why we are bullish in gold based on some fundamental data. But before we go any further, if you like what you see, subscribe to the channel, give me a thumbs up. That will help me reach other traders. And if you want to join our VIP signals, because everything that you're going to be uh, watching or seeing here, um, the signals are sent to our VIPs. The link is below this video. So to start with this, we're going to talk about the money supply, right? The M1 money supply in the United States. And as you can see, this is something that I do send to my this is the fundamental data that I curate for my subscribers. Only my subscribers have access to this. All right, so let's talk about that money supply, right? If you don't know what M1 money stock or money supply is, it's the most liquid assets that are circulating in the economy, such as cash, um, checking accounts, and yeah, cash and checking accounts, but mostly cash. So right now, we are going to look at that graph, right? This is the Federal Reserve economic side. This is where I get all of my fundamental data. And if you go here, you can modify how you look at this chart, and we are going to look at the percent change on an annual basis. Why? Because this is very interesting, right? How the money supply, the M1 money supply has changed year to date about 65%. That is a lot of US dollars in circulation. And remember that the more US dollars are in circulation, the less valuable one single dollar in your pocket is. And that is why we have had that depreciation on the US dollar versus all of the major currencies, right? And also, that's why we've had um, um, bullish runs, that big bullish run in gold, because money managers are fleeing from um, uh, are looking for other assets to hold instead of cash, instead of US dollars, right? Because the US dollar is devaluating so heavily. So we're going to look at the DXY first, and most importantly, um, given the fact that we're looking at how big the change year to date has been on the money stock in the United States, right? So where was it? This is the DXY. This is the US dollar currency index, and as you can see from the highs around March 20th, we've only been trading down, and the US dollar has depreciated about 13.44% since then, right from high to low. Now looking at the um, at the shorter term, right? We're looking at this range. Let me just delete this, right? Um, the DXY broke with the immediate bearish structure, the dotted one, right? But the thing about this is that we are retesting a big level here, and we are still very much um, bearish on the US dollar. All right, given the fact that we are looking at a super huge increase in a money supply or money stock in the United States. Also, we can look at the total assets of the Federal Reserve. This is during the pandemic when the Federal Reserve pushed or started to print money like crazy. We have never seen such an increase in the Federal Reserve's balance sheet like we did during the pandemic. From this is from February 20 or March 4th that they started this round of quantitative easing. Then around June they started to ease the program, but as you can see, they have they started to increase about late July their QE program, or the asset purchasing program, again hitting an all-time high on December 23rd of 7.4 trillion dollars in their balance sheet. So they are still buying bonds, not bonds. They're still buying government, yes, government bonds from um, commercial banks to inject liquidity into the economy. This is extremely bearish for the US dollar too. So we are looking for that move to the downside on the US dollar, the next leg to the downside on the US dollar, right? And having said that, we are looking also for some safe haven plays, right? People or money managers that don't want to have their their portfolio in U.S. dollars or their cash in U.S. dollars. They're going to look for some safe havens for their portfolio, not to lose any or to gain uh, some profits while this happens, right? But because let's be honest, no one, no fund manager, no money manager is going to hold a large amount of U.S. dollars into their portfolio, knowing what I just told you, right? They are going to move away from the US dollar and they're going to inject that liquidity into safe havens like the Japanese yen. Why is the Japanese yen a safe haven? Because uh, the Japan has a positive trade balance, and they're going to look over other safe havens like gold. Right now, having said that, let's have a look at the gold futures chart on the 4-hour chart, and actually let's go higher. And for that, I'm going to grab this one. This is the daily chart on gold futures. And we're going to look at some levels. Right here, we have one. This is the previous broken level. And as you can see, this is why I've been talking about that the possibility of a second rally in gold. Fundamentally speaking, I already told you why. But also, if you look at this daily candle, yesterday's candle, this was a very, very interesting candle in the sense that we got a dodgy form at the previous base, right? This was a big area of volume, and why don't we grab the volume profile so you can see what I'm talking about, right? So this area right here, this is where, and if we go ahead and make it all the way through there, this is the area that I'm interested in buying gold. Actually, I already sent that trade idea to the VIPs. So if you want to take advantage of that, where you will get the exact levels. Well, there's a link below this video for you to join us. But in any case, this is a very interesting zone in gold. Now let's see if we can get some structure out of this market. Um, in the sense that, well, I'm not looking to trade structure, right? In the sense that I'm going to extend this. I'm not looking to trade structure, solely structure, right? Why? Because the thing is that I'm really not that interested in blindly jumping into a market, right? I'm always looking for confirmation when it comes to trading. So this is the current structure that we're trading in. This is the third time that we are retesting the bottom of this structure right about the level that I just pointed out. So we have that going on for us, and if you look at what could, um, let me just do this in a thinner way, right here, and not extend it. Well, if we look at the possibility of this being a flag, we're going to calculate some targets to the upside. And that, well, if it looks like a flag and it smells like a flag, must be a flag, right? That's what I always say. So technically speaking, um, we could be at the beginning of the next leg up. So what targets are we looking for? Remember that we always trade levels, key levels. Why? Because we don't know if price or if buyers are going to be able, in this case, right, to break through the previous highs, right? Why? Because there are going to be a lot of sell orders placed at this level. How do I know that? Because I base my assumption on historic price action, right? On November, at the beginning of November, price tested the 1960 level, and we rejected it heavily. And again, yeah, I'm sorry about that. My MT5 seemed to be having a little bit of trouble. And again, on January the 5th, we retested that for another leg down. But the thing about this is that from this or from current levels, we do have a nice six, let's call it a 6% run to those previous highs. Now, um, this is the daily chart in gold. So if we calculate the move, yeah, we do have to go this. We have to go zoom in like this, because if we calculate the breakout on this flag, we could be talking. I mean, this is calculated targets, right? I'm not saying that gold is going to achieve these levels, but we could be talking about a 2500 or a move to the 2500 level. This is a big assumption. I'm not saying that this is going to happen, but if this is a flag, we could be looking at another 31% leg to the upside, given the fact that fundamentally speaking, this market is about to get very, very hot. So, um, but the thing about this is that, of course, that we're going to be trading, or I personally will be trading key levels on the way up, uh, meaning that uh, from the lows, I will be taking profits here at around the 1962, and then again at the 20 or at the 2000 level to be rounder. Actually, no, uh, the 2090 level, and then I will look for further upside, maybe to all-time highs. Right now, all-time highs are around the 2090 level, so that will be a great ride to the upside if everything that we have said pans out. We're talking about a 13% move to the upside, so the possibility for big gains in this market are uh, very, very much real. Now, if you want to get the exact moment and trade idea when I get into this market, there's a link below this video for you to join us. Stop whining and stop missing out and be assertive, right? It's pretty inexpensive, and we have done this for so everybody can join us and profit from trading the markets. So thank you, and I'll see you in the next video.